Analysis of a gold trade that we took about 3 weeks ago. So we have a total of 3 entries, the initial entry plus 2 scale-ins. We're going to do an entire higher time frame down to lower time frame analysis as a replay, and we'll talk about how every entry was taken and how it was managed across the process. So we're going to start off with the yearly time frame. The very first thing that we did is mark up 3 levels on the yearly time frame, the first level being the current support that price rejected, which was also the previous resistance, and that was at the 1680 level. So this was a resistance from 2011 until 2013, and this is when we started seeing some stronger global fundamentals coming out about global economic recovery. We pushed back down and we created a new higher low and then continued pushing bullish until in 2020 we created a new all-time high. So this was the first level that we marked off on the yearly time frame. The second level is this top wick rejection of this 2012 yearly candle, which was at 1800 flat. And the third level is the current resistance that price is making, but also the same exact level that price rejected in 2011, which is that 1900 level. So these are the 3 levels that we marked up on the yearly time frame, and then we drop down to the quarterly time frame to create some zones. So one tip is whenever you create zones on higher time frames and then you drop down to lower time frames, you can absolutely fix your zones so that you can pinpoint exactly where the price action is. So when you drop down to a lower time frame like 15-minute or 30-minute, so you don't have a huge zone and you don't get confused exactly where to take your trades. So you can definitely adjust your zones to pinpoint exactly where the price action is. So the 1800 zone that we're making here is this little consolidation resistance, and you'll see that a little bit more clearly when we drop down to the monthly time frame. But this zone was actually adjusted as we started to see some more price action and as price started breaking above 1800. So I'll show you that as well. This 1680 level is that resistance zone while this consolidation was forming until 2013 when we started breaking below 1680, came back down to consolidate down here, which on the yearly time frame we saw as the new higher low. And after price broke above 1680 in 2020, it came back down in 2021 to respect it as a support. So now the zone that was respected as a resistance previously is now being respected as a support. The third zone that we have is right above 1900, and this is where we tend to see a lot of volatility. So even right now, as the week is coming to an end, we are going to be super careful as we approach this 1900 level because there's going to be a ton of volatility, and we will see that when we drop down to lower time frames. Going down to the monthly time frame, we see that this level again being respected as support. We see a new support being formed right here before price pulls back into 1900 and then continues down to 1680. And even on the monthly time frame, we see a lot of rejections, a lot of wicks into 1900, showing us there is volatility around this area and liquidity generation. When we drop down to the monthly time frame, we see that consolidation that we were discussing on the quarterly time frame. So this is the level that price keeps tapping into and keeps rejecting. This is where we're pinpointing majority of the price action. This 1800 zone right here is exactly where price keeps rejecting over and over again with candle closes and wick rejections. Now we drop down to the weekly time frame. On the weekly time frame, I'm going to draw this line for you all to see visually that we were in this bearish trend. We broke out of that bearish trend in 2021, retested this level, broke above 1800. We know that this 1800 level is very important coming down from the yearly time frame, so we want to see this level being respected as support. So this is when this zone was actually adjusted above 1800 to make sure that we're respecting this area as support and then continuing up bullish from here. Another level that I do want to mark out here is that 1860, which is right here. In that 1860 area, we see it being respected as support, and then finally when price did try to break out of this bearish trend but failed to do so, it just came back into that consolidation area right above 1900, where we see a ton of liquidity generation. And once it got rejected and it came right back into that bearish structure, we respected 1860 as a new resistance, and then there was a ton of volume to the downside going straight to 1680 flat. So when we know that when we drop down to lower time frames, 1860 is going to be a very important zone for us. On the daily time frame, we see that bearish structure again being respected, that little fake out that we just discussed on the weekly time frame. We see that happening here. We see price tapping into previous consolidation. We see it coming back down, retesting 1860, and then continuing back down from there to 1680. When we finally break out of this bearish structure, price consolidates. There's two ways that the market collects orders. One is through retracements, and the second one is through consolidation. So we see market collecting orders here, respecting the broken structure, breaking above 1800, and creating some form of resistance around 1840. Pulls back down right into this zone, respects it as support. So now we can start looking for some scalp opportunities, turning them into swing trades. But what we know that once we tap into 1840, we are going to look for some partials and we're going to move to break even. Now we drop down to the 4-hour time frame. I'm going to remove this line here, trend line. On the 4-hour time frame, we see a couple of levels that we want to watch out for just for intraday levels. First one is 1820, which is that consolidation resistance for the 4-hour. And the second level that we want to watch out for is right around here, which is that 28 level. 1828 level. So this is exactly where we're pinpointing all the consolidation and all the price action. That's why I'm not putting that level down here, but I'm putting it a little bit higher where we see a ton of rejection happening. So now when we drop down to lower time frames and our very first entry, which is the 1815 level, that was actually taken based off the 15-minute time frame. So when we drop down to the 15-minute time frame, we know that once we tap into 1820, we are going to look for partials, and then we will start to manage our trade from there. So on the 30-minute time frame, we see a support being formed, price continuing back up bullish from here. When we look to the left, we see a little bit of consolidation. So what we want to see now is some form of break and retest above this area of 1815 flat, and then look for some sort of buy opportunities. So now here we're going to look for some sort of break and retest above this area, and then look for our buy opportunities. So we see price continuing bullish. We see a retest right into that area, again maintaining right above this a little bit of resistance and consolidation. And now as price continues from here, that's when we're going to look for our buy opportunities. But the main point being that as long as candles close above this area, we have very valid buy opportunities. So we see a massive bottom wick rejection, but again the candle flipping. As soon as the candle flips, that's when we look for our buy opportunity at 1815.48. The take profit for all entries was the same at 1900. And the stop loss was at 1810. So this was a much larger stop loss than we usually keep it for a scalp, and the reason was because we're trying to turn a scalp into a swing trade, so we want to give it enough room to fluctuate. So we were looking at the 4-hour time frame as well. On the 4-hour time frame, we have a bullish close here. We are getting indications of bullish volume on lower time frames, so now there should be no reason for price to come back down into this zone here, unless it wants to continue back down bearish or even tap into 1800 flat. But we have the confirmation on lower time frames that price has respected this area as support, so there should be no reason for price to continue back down from here. But we're still going to give it enough room to fluctuate, so we're keeping it tight enough that if price were to reverse from here, we cut our losses short, but we're also giving it enough room to kind of fluctuate as it needs to. Once we tap into 1820, this is where we took our partials, but we don't move to break even just yet. Instead, what we do is minimize our stop loss so that now if price does reverse back down, then our wins exceed our losses, but we're still giving it enough room to breathe, because the market, like I said, does not move in just one direction. It's always going to give you some sort of pullbacks or consolidations, because the market has to collect orders before it continues pushing. So in this case, you have a massive push up which has yet to be corrected. So the market, as long as price comes back and respects this area as support and then continues bullish, we still have very valid buy opportunities. So we see a retracement here, we see a bottom wick rejection. As long as the next candles continue bullish, the buys are very valid. This bottom wick rejection tells me that price wants to maintain bullish. This is simply a retracement of this massive bullish push up that we've seen here. And now the next couple of entries we're taking on the 4-hour. So once we pass above 1820, this is when we move to break even. So once we move to break even, we'll move up to the 4-hour time frame. So now we have broken above 1820, we move to break even. We don't trail our stop loss just yet, but now we're going to go up to the 4-hour time frame. Same thing that we saw on the 15-minute time frame. We just broke out of this consolidation. There's a ton of volume. We're tapping into that 1828 level, which is another very important level. So this is where we take another partial of this initial entry, but we're going to wait for some sort of pullbacks and then look for some buy opportunities to the upside. So we need to see this entire bullish push up being corrected. So you see a bearish close. Now you're starting to see a bullish close here. So as the next candle continues bullish, that's where our second entry is going to be. So you got a correction coming all the way down to 1820. Again, we haven't trailed our stop loss just yet, but we did take two partials. We moved to break even. Now that price pulled back down to 1820 and is pushing bullish, this is where our second entry and our first scale in is. So our first scale in is 1828.27. Take profit being at 1900. And stop loss being at 1825. So now as price continues, there should be really nothing stopping it from tapping into 1840. So this is the next partial level for both of our trades here. So we tap into that level. Now we're starting to see price kind of struggling to break above. We take our partials. So this is the third partial for our first entry and our first partial for our second entry. After taking partials, we wait for this level to be broken, but same exact thing that we saw down here. There's a massive push up which has yet to be corrected. So we're going to wait for that correction before we look for another entry. But once price breaks above 1840, that's when we're going to move to break even or even trail our stop losses. So now we start to break above. We're starting to see some volume dying down here. So we trail our stop loss after taking our partial. I'm going to use this 1828 level line as the trail stop loss instead of adding on more. But we trailed our stop loss to 1835 for entry 1 and 2 TSL, which stands for trailed stop loss. Now we're going to wait for some sort of a pullback here again before we look for our third scale in, or our second scale in and third entry. So we got some pullbacks, and then finally when price broke above, we got our second scale in and our third entry at 1852.58. Same take profit at 1900 and stop loss being 1850. So same thing here, giving it enough room to breathe. At this point, tapping into 1860, which we saw in the weekly time frame as a very important level. Took partials, moved to break even. At this point, all of our trades are risk-free, and now we're going to let the trade run to the take profit level. Again, massive push up, so we're waiting for some sort of pullbacks, price to make some sort of new higher low, or even consolidation to collect orders. So we see consolidation here, a ton of consolidation. Price comes down, takes us out on our third entry, our second scale in, and then price flips bullish, continuing up bullish, and we still have our first two entries running. So we don't trail our stop loss from the first two entries just yet, but this consolidation here, it's trending bullish, so it's still telling us that there's a lot of bullish momentum, but now the market is collecting orders before it continues up to 1900. So still trending bullish, and then we tap into our take profit from our initial two entries with our second scale in and our third entry. Took partials, moved to break even risk-free, got taken out at break even, but initial two entries running until take profit.